For information on an FHA loan in 2024, then you're in the right place. In this video, I'm going to go over all the basics of an FHA loan. I'm going to cover what kind of credit score you need to get one. I'm going to cover who they're for. I'm going to cover what sort of money you need to make or income you need to make to qualify, what type of home you can buy, and everything in between. So first, what is an FHA loan? So an FHA loan is a government insured mortgage. That means that the government doesn't actually do the loan. It's just that they insure the loan. And what that means is that the guidelines or the ability to qualify is a lot easier than some other types of loans. You can get an FHA loan actually down to a 500 credit score, believe it or not. Now, most lenders won't actually offer it and do that. But for example, I'm a mortgage broker, so I do have investors that will lend down to a 500 credit score. But before we go there, that doesn't necessarily mean that you can put a minimum down payment down and still get one. We'll go over that in a minute. The maximum loan limit is going to depend on what part of the country you live in, and particularly what county you live in. So I'm in Charlotte, North Carolina, in this area, and in most areas of the country that aren't high cost, let's say, like some parts of California, even some parts of North Carolina on the coast. But our maximum FHA loan limit in this area is $498,257. So what's that mean? That doesn't mean that you're limited to buying a house of that amount. But if you want to only put down 3.5%, for example, then the maximum home price you could buy is $516,328. But if you wanted to buy $1 million house and your credit score was, low, you had some other things that made it to where you needed an FHA mortgage, you could put down $500,000, get an FHA mortgage for the rest, and you would be fine. So that's one thing to keep in mind. The next thing is credit score bands. So mortgages tend to run in 20-point bands as far as approval, interest rates, etc. So really, in the real world, I'm a mortgage broker. I work with people all the time, day in and day out. In the real world, you really need probably a 640 credit score to put only 3.5% down, maybe a 620 credit score if you have more income to qualify. But once you get under a 620 credit score, it's going to be much harder. You're going to have much more income to qualify in relation to your debts. So if you want to keep a number in mind of what you really need, it's going to be 640. Also, there is down payment assistance available probably in every state in the country. It's going to depend on the state, what that is. But what I've noticed is that 640 is, again, usually the magic number for down payment assistance. Now, again, I'm a mortgage broker. I have programs that will go down to 620 with down payment assistance. But I think the magic number to remember is at least have a 640 credit score. The next thing we want to talk about is debt to income ratio. So a debt to income ratio is basically what is your income in relation to the debts. Now, the debts that we're talking about are the debts on your credit report. So a lot of times I'll be talking to people and they'll say, I don't have much debt. I've got a car and it only has $5,000 left on it. Well, it doesn't matter how much the loan is. It matters how much the payment is that shows up in your credit report. So for example, you might have a $5,000 credit limit, but your minimum payment might only be $100 a month. So that's what's going to be counted against your debt income ratio. The maximum debt income ratio in general, when you have a 640 credit score, for the house payment alone is about 46. So that means your income monthly before taxes can only go up to, your mortgage can only go up to 46% of that and still qualify. Now, if you have very good credit and you add the mortgage payment with the other payments on your credit report, then that can go up to about 56%, which is quite high. 56% of your before tax income can go towards all debt. So that's one reason an FHA loan might make sense for you, because it's a little easier to qualify for. Also, what I've noticed over the last year and a half probably is that since the FHA lowered their monthly mortgage insurance premium amount, that it makes more sense a lot of times for people that have maybe a 700 and slightly below, sometimes maybe even slightly over a 700 credit score, to get an FHA loan instead of a conventional loan. And the reason is conventional loans mortgage insurance is very sensitive to credit score. So if you have, say, a 700 credit score, your mortgage insurance could be hundreds and hundreds of dollars a month. Whereas an FHA loan, the mortgage insurance is only it's the same amount. If you qualify for an FHA loan, then the mortgage insurance is going to be the same, whether you have a 500 credit score or you have an 800 credit score. So that's one thing to keep in mind. Another thing about an FHA loan is there are two kinds of mortgage insurance. There's going to be what's called an upfront mortgage insurance premium. That means that 1.75% of the loan amount is going to be added to your loan. And then you'll also have the monthly mortgage insurance premium. So another thing to keep in mind, also mortgage insurance is for the life of the loan, typically on an FHA loan. So unless you put down more than 5%, you're going to have to pay mortgage insurance forever until you either pay the loan off or refinance the loan into a conventional loan. If you put down more than 5%, then your mortgage insurance will last for 11 years and then it will drop off. But that's something that I see a lot of people have confusion over. So what kind of house can you buy with an FHA loan? There's a lot of information out there that says it's hard to buy a house, that sellers don't want to accept an FHA mortgage pre-approval letter. And unfortunately, some of that is true. The truth is, unless you're buying a house that has repairs needed, peeling paint is one, a broken window, things like that, then, you're probably not going to have an issue. But if you do have some things wrong with the home, then an FHA loan wouldn't work. Or typically what I see is the seller just makes the repairs because they're typically just minor repairs. But you can buy, a single home. You can also buy a duplex. You can buy a triplex up to a fourplex. And the interesting thing is you can still buy, say, a fourplex, or let's call it a multi-unit property, and put 3.5% down. So that's a great house hack. This is a subject for another video, but you can use rent from the other units in a multi-unit property to qualify. But I'll leave that there. Now that I'm thinking about it, if you find this helpful, if you could hit like and subscribe, that would be fantastic. That really helps the channel. You can also buy a manufactured home. So you can even buy a single wide. Like, there's not many lenders that will actually do that, but again, I'm a mortgage broker. I have lenders that will. You can buy a double wide. You can buy a condo if the condo is in an FHA approved community. There's also something called a spot FHA approval, which again is a subject for another video. But one pet peeve I have is that it's kind of hard to find a condo that's FHA approved. Also hard to find a condo that's VA approved. Typically, you're going to have to get a condo that's conventional, but I can veer off into a whole other subject there, so I won't. But anyway, that's the kind of homes that you can buy with an FHA loan. So those are really the basics. I would say that if you have any questions about how to qualify, again, with credit score, down payment, loan size, etc., feel free to put your questions in the comments or go to my website, mortgagesbyscott.com. There you can reach out to me through the contact page. You can also fill out an application if you want to get pre-approved for a mortgage. So again, hit like and subscribe, and I appreciate you watching.